Welcome back, everybody, to the weekend show where I'll be breaking down the big mega cap stocks. So, before we get started, please hit that like button, and that is greatly appreciated. And if you're new here, consider subscribing. And if you want to go above and beyond and get some fantastic daily trade ideas, swing trade ideas, live trading, and all kinds of setups, definitely head over to Patreon, and that link will be down below in the description for you guys to join. And now let's get right into the market. All right, so welcome back on this Sunday morning, guys. And yes, it's not a good look, especially when you look at the market. We had the inflation data coming out on Friday, and it was also hot in top of that Saturday morning and Sunday morning. We're actually in a war with Iran, with Israel, and Iran throwing bombs everywhere pretty much in the Middle East. And look at this Hormuz closure. That's going to spark a big rally in oil and energy names. So we'll see how that goes tomorrow. With that being said, what market did on Friday? Dow was down 1%. Nasdaq down 0.92%, S&P down 0.43%, Russell going down the most with financials 1.72%, advancing 33.7, declining 62.2. So there you have it, why the market was down. 11 sectors. Energy led the way. Somebody always knows something. Energy led the way. Consumer defensive healthcare. So this is a risk off move in the market. Technology was on bottom, and financial was also down 2.18%. Stock market map here you can see Nvidia again took a beating, down 4%. Apple down 3.21. Microsoft down 2.23. Google was up 1.43, Amazon up 1%, Tesla down 1.49, Meta down 1.34, Netflix was finally up 14% on the day, and you can see consumer defensive like Walmart, big names like Costco, PG, KO, Pepsi, all those are up, and you can see regional banks, they were down, including the ETF, KRE, and healthcare names like Eli Lilly, J&J, MRK, they were all lighting up in the green. Next week, we have some ISM data going into Monday, but I think the key thing here that everybody's looking for is non-farm payrolls on Friday, retail sales, and unemployment rate. That's going to be a market moving event, especially when it comes to these numbers that are coming out Friday. Fear and greed index 43 right now. We are back on fear. And then we got investor sentiment. You can see 33.2% are bullish, 27% are neutral, and bears, they're pretty much up at 40 right now. So we'll see how that goes. And let's just talk about some names that are getting beaten down once again. Let's start with Microsoft. On Microsoft, it was down 2.24%. It was trying to recover all day, and you can see we got up to 396.82, but we did not fill the gap all the way immediately. Rejection came off of this key zone, which is right here at 395.62, and the stock now trading just above the gap. From just a couple days ago, we had that gap up and go, and then also we had a gap down and go on Friday. So Microsoft here, you can see the Bollinger Band on bottom now moved up and sitting right here, right from these lows from last week. And so far it's trading right here. So I think what would be a fantastic opportunity if this thing can actually hold gap full reversal at 389, that would be a nice opportunity. But if this thing does not hold and Microsoft finds its way all the way back down to 381, once again, that would be the next support level to watch. Now, if we can somehow hold here and maybe clear that 5-day moving average, 393.71, I would say 394 to 395.62. If we can clear that come Monday morning, let's say sometime Tuesday, then definitely we're heading back up to close the gap right here just under 399. And over that, you're going to see a push and a retest of the daily negative sloping 20 SMA, which is sitting at 403.45 at this moment, and possibly even retest these highs right around 406 on Microsoft. So watch out. I think the stock is going to make a move, and the worst is behind. And the way I would put this, that the big selling, the big drop on Microsoft definitely is already behind, and now it's just a matter of time where Microsoft finds a bottom and rallies back up to the upside, just like what you're seeing on Netflix. And I've been talking about it, and now you can see that thing did put in a bottom, and now we're going back up on that stock. On Apple, stock is down 3.21%. So Apple definitely not looking that good, especially last week's closing on Friday. You can see we did break below that key zone and the 50-day 265. And if that is the case, that remains going into Monday morning, Apple can drop further down, all the way down to 259, 255, and maybe even into this gap just below 250. We can recapture the support 265. Watch out for a move up to 268.69 to retest these moving averages, 20 and the 5-day moving average. If we can get over these, then watch out for 272 on Apple. Until then, I mean, Apple definitely not looking that good, especially with this big drop and some high volume selling on Friday. And here's my X account. And if you guys are on there, definitely give me a follow. And there is no subscription, nothing here on X. And you can always reach out to me, Roy, here on X, and you'll get a faster response. Now, I do want to share some fantastic trade ideas that we took recently, guys. And it's not only one, it's many. So this is from Friday. You can see UL puts, but I'll show you guys here on UL that we took these puts just on Thursday. You can see 226 and UL puts came out, and what happened yesterday? That thing jumped big way, and we made really good money on that play. Here's some more. This is from Friday. You can see UL puts, UL puts, UL, and then let's just have a look at these trades from Thursday. 226 trades and profit. I'm not even looking at other people. Let's just forget about it. I'm going to show you guys what I did. This is Thursday. You can see my account just took off and never came back down. Look at these trades. We took IGV. This thing was a monster. Still have a lot of these left and still green. Look at this one here though, from just a couple days ago. TSM and SMH. SMH was at 427. That's where we entered. TSM was also near 400. I think it was 389, I believe. 370 puts, you can see, and 410 puts. And you guys saw what happened on Thursday and even on Friday. Massive, massive gains on these. GDX, we played multiple times. We got paid, and we took a position again on Friday. So if you're somebody who's really serious and want to do this full time, and this is what they want to do for the rest of their life, then definitely this is the most underrated channel that actually makes most amount of money and puts out lots of trade ideas. You can go and pay 250, 350, even 1,000 bucks. You're not gonna get these types of trades and not gonna get these types of performance when it comes to trading. You can see, just to give you guys another example, you can see Roy here. This man is up year to date already 138%. And I did show you guys my own thing for 1 year. Last time it was up 600%, and it's still up over 600%, which for this year I'm already up close to, I think I'm a little bit less than 130%, but it's still only 2 months into this year and already up over 100%. So that all the things that actually matters. And if you're really serious, definitely check out my link down in the description for Patreon. On AMD, it's down 1.70% on Friday, and you can see AMD did not close over that key zone 202.69. As a matter of fact, the next key zone is 195, and we could be going there early as Monday. And this has to hold, otherwise, we could be going down to this gap, which is at 170.68. If AMD can recapture this support 202.69, we could see a push towards that gap and the 20-day, which is at 210.73, and from there these highs needs to be taken out if AMD is gonna move higher, right about 219 to 220, and the 50-day moving average, you can see it's also sitting close to 219. On Amazon stock, it's up 1%. So Amazon was able to hold up that 207 and still trading around that 210. So going into Monday session, you can see there is something happening here on Amazon. As long as we can hold this line, I would say right about that 207, 206. I mean, this could be somewhat of a bear flag as well, which could be forming. So keep an eye on that as well. If this thing plays out and we take out 205 here in this case, we could be coming back down, and we still have a gap at 195 here on Amazon from before, and we did not close that gap 194.69. So Amazon could be pulling back if this thing gets under 205. 207 would be the key point here, and then below that 205 all the way down to that 196 marker, and possibly even lower to close the gap. To the upside, if Amazon remains over this trend line in 207, we could see a push towards these highs 210, 211. If that breaks, watch out for 215 into 220s to close this gap right up here. On Google, stock is up 1.39%, but Google is down also nearly 1% right after closing on Friday. So we'll see how things open on Monday morning. But you can see we retested that 300 zone and we found support here. Again, we did that here on Google, and looks like we're about to come back here at this key zone at 300. But if that gives up, we could be retesting these highs right here. That is around that 292 mark right here on Google. If somehow Google is able to hold up and bounces back up and takes out 314, that would look much better, not bullish. We could see a move all the way back up to 320.53 to retest these negative sloping 50 and 20-day moving averages. On Tesla stock is down 1.49%. So Tesla is down again. And you can see we're barely just trying to hold up at 400. But if that does not hold, you can see this trend line here. We could be coming all the way down to bottom of this trend line. That's going to be around 392 to 390. And we do have lower Bollinger Band sitting at 396. So these are going to be some key support zone to watch. Lower Bollinger Band near 396, and then right down here, right about 392 to 390. This channel support right here. To the upside, you can see time and time we got rejected off of this downtrend line here. So if we're going up here, we need to get over, first of all, 407, 414 20-day moving average, and that would be breaking over especially this down trend line here. And if that happens, we could see a run up all the way back up to 432. So Tesla is definitely on a downtrend, and this can continue if this thing wants to come down maybe more and fill some of these gaps to the downside, maybe even retest these highs, these breakouts from before, going back up to all-time highs. That could be a possibility, and that could be an opportunity for all of us here on Tesla. On Nvidia, stock is down over 4%. So Nvidia took a massive beating on Friday. And not to mention, we had the big move to the downside also after reporting earnings. So this was not, something that everybody was expecting, that Nvidia would just drop like, that on earnings. But it did, and it can possibly go down even more. And you can see we had a gap down on Friday. So there is a gap just over 184, and we were not able to fill that gap. I think Friday's high was 182.59, and that was it. So going into tomorrow's session, I'll be looking at Friday's high. If we can take out that 182.59, maybe we can fill the gap at 184. And if you look at my screen, just have a look down here. And what's happening here, you're seeing a lot of volume. And guess what? Retail traders, investors are buying up the dips like crazy on Nvidia, especially on Thursday, right after earnings. So that became a bag. And now, even more, you can see on Friday a lot of buying. So when you see a stock, especially after earnings, and it goes for pretty much everyone. You can't just buy into it because there is a big move down, and you think it's just gonna go up because earnings are good, and Jensen is just gonna come out and pump the stock up again because these insiders they're just selling the heck out of it. So I mean, don't get me wrong, you can still make money buying the dips, but your position, your sizing has to be smaller. Here in this case, this is a falling knife, just like what we saw on Microsoft and Netflix, and we'll talk about Netflix in a second. This thing can come down easily down to that 173, 174 to retest a lower Bollinger Band and possibly even retest bottom of the channel, which is at 170, 169. And if that's the case, you already bought the dip Thursday, and now what are you gonna do? So that's why, right after earnings, it's always, you know, a good time to wait and see what the stock is doing, and then slowly build a position, especially on a big name like Nvidia. So going into, especially tomorrow morning, Monday morning, if we can take out that 182.59 Friday's high, we could be filling the gap, and this is where I would expect, Nvidia to find a lot of resistance here at 184 after filling the gap, because we have also 20-day, 50-day, and 5-day coming down right about that 184, 184 mark. To the downside, the next key support would be bottom of this channel. That's going to be at 170 to 169. And if that gives up, we could be going into 160s, maybe even 150s on Nvidia, which Nvidia never retested these levels before on a monthly scale. All right, so Netflix is up nearly 14% on Friday. So this is why you have to be patient when it comes to swing trading. Same names, like I have mentioned before, like Amazon already paid us a lot of money. Then we have Microsoft that actually, paying and will be paying even more when it does this, like Netflix did. And people that are actually subscribed to my channel watching these videos, they know when I say something about a stock, especially the big names, you have to wait. If you're just rushing things like, oh, it's trash, it's going down, look at what happened. Now you're missing out. Now, guess what? The chasers will come in and try to chase this. And they did. Look at right here. Look at the wick here on bottom of this candle. I mean, dip buyers just came in like crazy here. Right here, right about 90 bucks. And forget about filling this gap. Now we are gapping up and going here on Netflix. And the next key zone I'm watching is 97.3. If we can take out these highs, we're going into hundreds. And don't forget, this thing, the daily 200 SMA is right up here. So there is plenty of upside. And guess what? I have said it many times that I'm buying a lot of Netflix shares, calls. Everything is just now turning green and paying, and we'll be paying even more. And that's why you guys saw a bunch of plays that I, shared with you guys. If you're really serious, this is the only way you can start making money in this market. And there is so many other channels out there. I don't think I can even count. Countless names are out there, but this is the most underrated channel that makes most amount of money. And you can come into my Discord, ask for proof. I can show you, including my own account that I have showed you guys before many times, year to date, and uh, you know uh, pretty much for 1 year how much that is up, and people that are following me accurately every day and doing these same types of trades that I'm getting involved and getting in and out, they're doing the same thing, 400 500% up, year to date, already 2 months into this year, up 100 130%. Forget about 100%, even if you're 50% up for year to date, I think that's a massive amount of gain. You don't get that with S&P 500 that you're getting with my Patreon group. So if you're somebody serious considering joining somewhere, definitely try it out. I'm pretty sure if you're serious, you're going to make serious money in this group. Now Netflix, like I said, 97.3. If that crosses, we can go into hundreds and maybe even retest daily 200 SMA, which is right up here. And at one point, it's going to come up here. Now, if we get some sort of an opportunity again, I'll be looking to add more exposure if this thing somehow comes back, and maybe I don't think this is a runaway gap. So I don't know if this gap is going to get filled, but I would welcome that if this thing comes back down here, maybe around that 87, 85 mark. That would be a nice dip. But before that, we do have support now at 94 and then 91.7 before going down. So keep an eye on Netflix. This one will move very quickly. On Broadcom, it's down 0.67%. So this one looks like it wants to break down, just like Nvidia is breaking down. And so far, I mean, you can see Broadcom here uh, trading below daily 200 SMA, which is at 318. So if this one does not hold, definitely watch for that 306 mark right here. These lows down here, that does not hold, we could be going into a deeper correction on Broadcom. And when you look at this monthly time frame, people think like, oh, it's end of the world, and it's just gonna go down. This is it. Look at the move we had. So even if we come back all the way down here, it makes totally sense. Even if we come back all the way down here, this is the monthly 20 SMA, and we retest like 250, 249, maybe even go a little bit lower here. I think the trend is still up, and there is nothing wrong with that if we do that. But even on a monthly scale, you can see we're just pretty much wedging here. So if this thing somehow takes out, I would say, these highs right about that 355, 356, we could see explosion to the upside. So keep an eye on that. That is a longer time frame, but so far that's not happening. You can see last month we got a rejection here. So this month, if we get let's say over 334, 330 here, break this down trend line on the monthly scale, we could see more upside. Otherwise, I mean, like I said, even if we come back down here, last time we did that here, what happened? Nice bounce, right? So it would make sense this thing comes back to 50. I mean, it's not that far. That would be a fantastic opportunity for a lot of us to go long on Broadcom, and I hope all that make really good sense to you guys, and good luck with all your trading coming into Monday morning and next week, because there is going to be lots of volatility, especially with all the news and everything that is going around stock market and all over the place.